Hey guys, so going long inside the inversion fair value gap right here. Just a quick breakdown for the trades I took today. So got stopped twice before because I was just not patient enough. Nevertheless, we finally got a nice entry and it looked really well. So basically today was PPI day, so we had high impact news at 8:30 as you see right here, and now we swapped the New York Open Killzone liquidity, and we also traded below all opening prices into a higher time frame gap. And now I'm looking for the inversion fair value gap right here, that we inverse it, that we inverse the bearish fair value gap. We closed above it and I entered. He reacted off the order block with the wick to consequent encroachment. So that looks really well. Wasn't the easiest day today. Still both longs before could have been avoided. So the stop out could have been avoided. Especially because I was aware of the fact that we are still in this choppy price action right here, and it looked to me a bit obvious that we would draw into the higher time frame gap as well, and then we reacted off it and traded or closed above the inversion fair value gap the first time right here, so I entered, but we have still this wick down here as a inefficiency. So basically wicks are gaps and it's just unbalanced, but here we traded into it, so now it's basically balanced because we traded to consequent encroachment of the wick, and now it's a valid trade, and we are also within the right time, so within the 10 a.m. macro. And now I'm already highlighting the bearish fair value gap, which I want just see to fail. So that's why I mark it as a inversion fair value gap, and I would like to add there to my position as well, if possible. And yeah, just looking at the range. So basically, if we have a dealing range, I would like to add or enter below consequent encroachment, and depends on where your low forms and which targets you target, basically. Yeah. So now I'm trying to add to my position if we can close above consequent encroachment. So now I would like to see that we create a breakaway gap, because displacement would now be important, that we shifted market structure and are now able to target higher prices, so that we are now in a market maker buy model. So that's why, especially because the gap is also in between the range of the choppy price action, I would like to see it stay open, because the prices in there are already balanced, so there's no need to trade into it again. So looking good, you can stay above the gap, and now I'm going to add, and basically that's my full position. And now I can also try my stop, because I'm convinced that if we trade above the inversion fair value gap and we can also close above it, then we won't trade to the breakaway gap again. So that's why I traded my stop here. And now I could also add to my position, but the risk is still the same or even less, so that's basically ideal. And here I mark or highlight the first target. the buy side liquidity. So now we trade into the inversion fair value gap once again, and that's completely fine. And we want to see price find support right here, and especially close above the gap. So wicks do the damage, but the body says sorry, and that's what we can see right here. So we had also already SMT with ES. So ES did not take out the 830 low. So that means we have a bearish SMT, and in that case, that indicates that NQ is weaker. So ES is the leading index, but I just don't like to take trades on ES. That's why I still stick with NQ. But as a result, you can expect that NQ is just more slow and more high resistance and just not as bullish as ES, for example. But I still wanted to see that we take out the buy side liquidity right here, definitely. So not only by wicks, but also like with bodies. Perfect would be that if we find speed, and then we would also like trade to the 930 opening price and target the high right here, or basically trade to the breaker right here. We definitely could also take out like news data highs right here, so that's also within the New York open kill zone. That would definitely be a nice target, but regarding the bearish SMT we had, it's way more unlikely. Still, the first target right here was a bit too close to my trade, or just not enough. But you will see. So right here you can see that we also like created or engineered buy side liquidity. Right here we have the 5-minute chart. So we also swept already London lows and highs. So they are not relevant. Now I'm highlighting like the 5-minute order block right here and looking at consequent encroachment. Here's the 15-minute chart. And here you can see I highlight the wick. So basically that's a order block, and the wick is like the most sensitive point. And here we have the regular trading hours. So traded back into the opening gap, and now we are trading higher. So as you can see right here, that's ES, and ES is already near the highs and never took out the 830 low. And now I'm looking at the portion which is still open of the wick, and that's basically a inefficiency. And I'm looking on it, or I'm looking to ES or S&P on my second monitor, so I can see how ES reacts to the level I've marked out. So basically to the lower quadrant, the consequent encroachment, and the upper quadrant, and how NQ will react as well. So now we have basically equal highs. And I'm already playing with the idea to take something off, but for me that's just not a sweep, so that's not enough. So I'm still waiting, and I still want like a aggressive push above the buy side liquidity. Now I'm trading confident my stop to break even, or even in a small win. So basically the setup is still perfect. It's just I had today a bit wrong money management, so the losses before are completely avoidable, so I'm just not patient enough, and yeah. So now we are reacting of consequent encroachment of the order block, and we can trade even above the buy side liquidity. So now I could definitely have had sold something, but yeah, I'm still looking for higher prices because ES took out the highs right here as well, and was also like trading each of the quadrants of the rig right here, but NQ is just way more weaker. Yeah. So here's the 5-minute chart again. So now we trade back into the inversion fair value gap, and as you see right here, the move down is very aggressive. We have also created a bearish fair value gap. So that's definitely not ideal, but yeah, we will see. So basically that was to be expected as well, because we had a bearish SMT, and the S was also like trading to consequent encroachment of the wick right here, so of the portion which was left of the wick, and that's a sensitive level, and it is expectable that we can retrace at that point or reverse. So NQ was following, but I still wanted to see yeah, some prices into the portion right here, so to consequent encroachment of the order block of the 5-minute chart, or that we trade into the gap right here. So that's also a 5-minute fair value gap. So I've highlighted the fair value gap or bearish fair value gap right here, and I want to see that it will fail and that we can trade above it and then use it as support, so basically as a inversion fair value gap. And we are also still within the macro, so I don't really expect a quick retracement, because I don't really think that we are bearish. So therefore I'm still just sticking to the trade, and yeah, didn't trade my stop also too tight, because the wicks could have also yeah, if you trade your stop too tight below the inversion fair value gap, the wicks would basically stop you out. So therefore my money management with that trade was actually, or my stop management was actually quite good, but I could have also like targeted it differently. So if I expect NQ to be weaker than ES, I could also like enter with a bigger position right here, and then like take all off at the first low-hanging fruit right here, so the first target, and that would be also like a nice trade. But we are now finding support and trade above the bearish fair value gap, so now it's in inversion fair value gap. I want to see price trade into it and then continue higher, so that's what I'm looking at. And basically, to fast forward the trade, we got stopped right here, as you see. And here's also like the consequent encroachment of the 5-minute fair value gap I highlighted before. So yeah, basically it's a bit frustrating, especially because with the losses before. So because the stop was now way more tighter trailed, it's actually a win, a small win, but with the 2 losses before, it's just not enough. And yeah, so yeah, just typing something out to my journal. And now let's maybe break down the trade. So here you can see the daily chart. So I was bullish for today because we just had a bullish day and also like all-time highs. And then dropping to a 50-minute chart. So what was important to me, basically, we have like the opening prices right here. So and in that case, regarding the opening prices, you can see that we traded a lot in between those prices. So in between the 9:30 opening and the midnight opening, and therefore you can basically expect that it's not a trending day, especially because we took out new or all-time highs already. Still, we have a huge wick and we couldn't close above it, so we still expected some price movements higher into the wick right here. But also like with the SMT right here, you could have expected NQ to be way more weaker, and I could have could have also like traded it differently, that I stick with my wider stop right here and then just let it play out. So basically eventually we also met my objective or my first target right here at consequent encroachment. So yeah, but you never really know how deep the retracements are going to be. So basically you could have also like traded way lower, maybe into the 8:30 opening price and then range and later take out the high. So that's not really ideal right here, but yeah, just have to be more patient and be more specific with my target. So if I want to trade bigger ranges or smaller ranges, and basically that's what I was talking about. So as you can see, ES was way more bullish. So we had SMT right here, and wait, and we also like traded to consequent encroachment of the wick right here. So of the portion which was left of the wick of the news candle, and we also like traded into consequent encroachment. So we tapped it 3 times and then we broke lower, and that was to be expected, and therefore it is obvious that NQ will follow. So could have been traded differently, yeah, but nevertheless that's basically your perfect setup. So the market maker buy model within the 10 a.m. macro is just perfect. So that's basically a super reliable trade if we are not in trading conditions and if we are patient enough. So basically right here I traded off the order block right here, and that's just not clean enough. So I knew that actually, but I was just yeah, jumping the gun, and then we closed above the inversion of fair value gap right here, and that's basically a rule for me. So if I trade like, if we don't have any break of structure with displacement, so with a fair value gap, but I trade inversion fair value gaps, then we have to close above it. So to close above consequent encroachment is not enough, but we have to close above the gap. And in this case, it's still not enough because we have still unfinished business right here. We have the long wick, and then we trade it into it, and then we can find find support and then trade higher, and therefore that's the right entry right here. Just not the wrong target management, you could say, but still a valid trade. And yeah, we're still learning, and yeah, I think that's it. See you in the next one.